And welcome to the Degen Den. Thanks for joining us here today. Got my good friend and co-host Dos. How you doing, mate?
Fantastic. Keen for this one. What the market's been doing lately.
Yep.
Yeah, we've done a little bit of prep for this one, so I'm keen for it.
Which is obviously what we do every time.
Of course.
So much prep because we give you guys the best, most informed, up-to-date information on all things crypto and obviously all the degenerate things that we are doing in the space. Not everything that we're thinking, because that could be dangerous, but all the things that we're thinking in this crypto space. So to start us off, mate, like where are we at? Oh my goodness, there's blood in the water.
Yeah.
Everything's blood red. It is a wild time to be in any market right now, but where are we at? What's going on?
So we've said this before, but the best indicator of what the crypto markets are doing is to look at Bitcoin. Bitcoin tells us what crypto is doing. So, and we always use USD prices because that's the most relevant. That's what everybody's talking about.
Yeah, it just makes things a bit easier.
And it's also related to the psychological levels too. So it's important to think in USD prices when we're talking about crypto.
Yeah.
So Bitcoin at the moment is 29.3K USD. We had a little bit of a rally kind of overnight up to the 31K mark.
Got rejected hard, didn't it?
Slapped back down.
No.
And
Thanks
is
for coming.
looking like it's in a little bit of a downtrend. But that came from a massive drop in the past couple of weeks, or the past week even.
Yeah.
We did our pod last Friday.
Yeah, about a 20% drawdown?
It was about 36K last
Yes.
Friday, and now it's sitting at 29. And we broke down to 25.3K at the lows.
Yeah.
So we've had to bounce off that, and we'll see where we go from here.
So what are some things in your mind, Dossa, that contributed to this huge downturn? Many are saying that we are officially in a bear market. There's lots of things going on macro, but before we get to those macro markets, within the crypto world, what are some things that have influenced this going from upper 30K range to all the way down 25K range?
So a big part of it is leverage. And Bitcoin is obviously a super leveraged crypto.
And to explain to one of our three listeners out there, which is my mum and might not know exactly what leverage is.
Sure. So that's when you essentially borrow, you're borrowing money is the term, is the function, I guess, using some of these exchanges that are out there. They provide the service for you where you will be able to bet with your crypto which direction it's going to go. Yeah, you can short it. You can say, I think crypto is going to go down. So you can actually make money when the markets go down if you know what you're doing.
Yes, you're shorting the market.
Yes.
Yeah. But great movie to show that is The Big Short.
Yeah, great movie.
Great movie.
So you can long the market, which you make money from when the price goes up.
And we think the price is going to go up. Yep.
Yeah.
So then a lot of these stocks in both the traditional markets and crypto markets have been over-leveraged.
Yes.
And to define over-leveraged, how would you say that?
Well, I guess over is relative, but there has traditional it's a growing market, it's a growing asset, Bitcoin. So typically over time, the amount of money that gets leveraged goes up, right? Just as more people enter the market, as the asset grows in popularity and use cases, there will be more leverage used in that market. So when we typically get above $14 billion in leverage, this is one of the things that technical analysis always look at is the leverage ratio. Doesn't matter what the price is doing, look at the leverage. And in one of the past, this past several times, it's gotten above 14 billion in leverage. It's always come back down to either around 10 billion in leverage. Yeah. Which is where we're...
Which is both short positions and long positions, right?
Exactly.
They're in a leverage position. They're not actually buying it. They're putting options on where they think it's going to go. And that amount is far greater than the actual money that they're holding. And so when the opposite happens, they get margin calls.
Well, and it's interesting in crypto leverage because it's a little bit different than traditional leverage because the margin is in itself tied to the crypto. So so it's different because I know there's a whole you can continue to add margin to it to protect your position,
Right.
but it works differently than traditional margin. So you might put down, let's call it half a Bitcoin theoretically down as your position, and if you did 10 times leverage, then what's that? 5? You're essentially betting with 5 Bitcoin.
Yeah.
So the price, if you had 5 Bitcoin and the price went up and you were longing, you would make that much amount of money relative.
Yeah. So how big your bet is, and that's the problem that we're seeing right now, that a lot of people are being forced to sell. They're over leveraged. They're being liquidated. Yeah. And when a whole lot of money, especially maybe more institutional money, so that big money is being forced to sell, all that sell pressure, that volume is going to push the price down, right?
Speaking of big institutions that are being forced to sell, Luna.
Oh my goodness!
Wow,
got caught on that one. Yeah. Not as bad as other people, but and that is a big giant in the space. Like, it was, would you say, probably top 2, maybe top 3 stable coined economies.
This was one of the top crypto projects. This was red hot when everything was dying, when everything was dipping. It was the one that was going against the market. It was crazy. People were believing in this thing. It got in the top 10, I think in the top 5 at one point of coins in terms of market cap. Yeah. It was massive. Yeah. The fact that it has gone from over $100, $111 to $0 essentially.
And we saw yesterday
it's dead.
That it had dropped 100%.
Yes.
100%. I've never seen that before.
Dead. This is I remember when moment in crypto that we get to experience, right? That we get to kind of, because it's interesting when you're thinking about the markets, you can look back at what happened. But in order to get the feel of the emotions that were going on at the time, because investing is an emotional game, understanding emotions is, the better you can understand emotions, that can give you an edge in investing. So understanding what this feels like when, especially, I know you had a little bit of Luna, watching that go from very well being probably one of your best performing assets to nothing. Like, what was that like for you?
Well, I was fortunate in that I took profits from previous investments in early December and rolled that into Luna.
Okay.
So I wasn't playing
with house
money. And this is just being honest. Yeah, I wasn't playing with house money. So I was in an okay spot, but then you see it, then I think from where I bought it, maybe going up 120% from where I had. So that's, profits on profits. And then I, just wasn't really watching it and no one thought we could get to where we were.
Came out of nowhere.
But it sucks. You're looking at this thing that's worth a decent amount of money, that you've got amazing profits when everything else really has been going down in the last couple of months. And it's gone up, it's more than doubled. You're like, oh, fantastic. Yeah. And also I really liked the team and what they're building in that whole DeFi space.
Cool
I thought it was a really, really good project. And a somewhat safer one. So that sucks, because you're going, surely this is not real. But then also how? That's the other thing. You're like, how did this happen? And that's a complicated discussion. We don't need to go into that in depth, but I think that is a huge reason why we've also seen that overall sentiment decrease. Yeah. Because you've got people going, well, okay, if that was one of the safer ones and that's gone down, then what does that mean for these other, not just stable coins, but this other altcoins?
The confidence in the market. Yeah. Altcoins especially. Because if you're looking at a top 10 crypto, top 5 crypto, that went to 0.
Exactly.
That means anything's on, like Solana, Cardano, like those ones previously, I thought as that's set. They're going to continue. Like maybe not. Like, we still have hope for those projects, of course, and think they're good projects.
Yeah, and look, we don't want to brush everything with the same generalized brush, but
they do a different thing.
Yeah, with the algo and everything there. So, and with pegged to a stable coin, and that's essentially in a very condensed form why it dropped to 0, is because they lost their pegging to their stable coin.
And part of it as well was they recently bought Bitcoin as part of
collateral,
their
and then their collateral got called in.
And everybody was super pumped about that. Everyone's like, oh, Do Kwon, he's a genius. Like, great idea. Lots of people were pumped. And here we are. That was part of the rocket fuel that brought us down to 25K. Yeah. So we're looking to bring it back to where the markets are at. That was kind of the big trigger to take us down there. And yeah, we're at 29.3K at the moment.
And that's just not the only triggers. That's within crypto. But what people in crypto need to understand as well is that there's a very bearish macro environment going on in traditional markets as well. So we can speak to that very quickly.
I guess before we get into it, you say macro. What does macro actually mean?
So macro is the overall larger environment. Like we're talking about specific stocks and investments and stuff here. The macro environment encompasses all the different, I guess, monetary instruments that play into the economy, the global economy at large. There's lots of things that go into that. We've got bigger players like the US because they've got the reserve currency. But there's many things that play into this environment as a more global thing that have got to do with what's happening within countries, what's happening in their own economies, what's happening in society, what's happening in the environment, all these different things that impact our economy and what we're talking about at a larger global level.
Yeah. Okay. Well, I know we've got a few things that we really want to break down the different areas of the macro. We've got a few ones prepared to talk about.
So obviously the big first one is these aggressive rate hikes from the Fed. So inflation is the big topic. Everyone's talking about it. The inflation rates, what we're at, we're a bit over 8%.
Yeah, it's come down.
Come down a little bit.
Recent figures come down a little bit, not as much as expected, but yeah, it's on its way down.
Yeah, and so some of this stuff has been factored into the market, adjusted in as well. But in terms of sentiment anyway, people are going, oh, inflation, there's this big issue, this big scary thing that's been let out of the bag, and people are sort of scared. And then I feel those aggressive rate hikes are also affecting how players are moving in and around the market of going, well.
So Tom, why does raising rates decrease inflation?
So essentially what you've got is what rates are is their interest rates.
Yeah.
Right. So what we've done is there's this lever. Think about it like levers in an economy, right? So if the economy is in a downturn, for whatever reason, it's going to shit, stuff is worth less, we want to decrease interest rates, which means we want to reduce the amount of money that people have to pay back on their loans.
Right.
Because what we're doing is we are decreasing the worth of money and we're increasing the availability of money. So economies, really, the best way to think about it is economies go, it's how the flow of money goes. Okay. If the flow of money is going very quickly throughout an economy, then you've got an uptrend, you've got a bustling economy in a very general sense. And when different things are in a downturn, we have the flow of money stifles and decreases, it lowers. And so really what we need to see is easy access to money. And that's what we've, essentially seen over the last 10 years, since 2012, is we've gone, hey, we're going to lower interest rates so you have greater access to money and the money is cheaper. That's the big thing, right? So you've got these big companies, and that's where these tech companies, Google and Amazon, have absolutely capitalized to the whatever degree, because money has never been as cheap as it's been, because they can get, $1 billion loan and they're only paying, 2% interest back on it. So money's super cheap, right? So that's a good way, because that's how you stimulate the economy, right? You go, hey, there's cheap money. You're going to not pay that much interest rates. It goes around. Everything goes around faster. Encourages growth and productivity. Away you go.
That's an interesting concept, though, that the flow of the money around an economy, that's provides strength to the economy.
Yeah, well, it means more people are transacting at a higher volume.
Makes sense.
That's what it is.
Yeah.
Right? And when that reduces and people are going, oh, I'm a bit scared about the economy right now, they're putting their money under their bed. That means the money's not going to the retail. It's not going to all these other small businesses and large businesses. So you're getting the volume of money being reduced.
Yeah.
The transactions being reduced because people are just storing it. That's a downturn in the economy. That's, in a recession, people are just trying to store their money, right? So what you've got is that's a great lever to encourage a more positive uptrend in the economy. But that lever has been being pulled for the last 10 years and rates have never been so low.
Yes.
So what we do is then, okay, well, let's put that lever back up and let's make interest rates higher. So that's going to then tackle inflation, because really, if you got money that's really cheap, people are just using all the time, then it's essentially to some degree debasing the value of a small amount, right? Easy money. Because then the other side of that, the other big lever we have is printing money, right? And we did that in excess during the COVID times.
Yeah.
Those stats about 1/6 of all money ever printed.
1/5.
1/5 was it ever printed was printed in the last 2 years.
There's probably going to be some flow-on effects from that.
Well, think about it, right? Like if you had 100 shells, all of a sudden that we're going to go, well, actually, we're going to then make a shitload more shells, and you could sell each shell for $10. Well, if you've now got 200 shells, you've got half the worth of it what it was.
There was a Facebook article that popped up earlier today. I think it was a town in Australia. I think it's Castlemaine, maybe. And they're trialing their own clay economy, their own clay dollars that they've kind of crafted. They're doing a little economic trial, $10,000 worth of clay coins. That'll be an interesting one to watch. See how the market responds to it. But the point being that if inflation's going up.
So that's essentially what inflation is that you're getting, so the denominator is increasing, right? So you're devaluing the currency. So when we're saying about 8%, it's what you have, you have $100, it's worth 8% less the next year. So you're getting less stuff, right, for your money. And so that's quite high. That's quite scary because, you got $100,000, it's going to be worth, $92,000 in the next year or whatever. So, roughly.
So what happens to countries who don't get their inflation problems under control?
So we've seen that before, and probably the best example of that is, and what we call that is hyperinflation. Germany in the early 1930s.
So the Second World War?
Before,
right, yeah.
And arguably led to the Second World War, because after the First World War, everyone came in there and smashed Germany and said, how dare you shouldn't have done that. And so what they did was completely took away their industrial areas. The French took over the industrial areas, and they just absolutely stifled their ability to have an economy of trade. So what happened is you had inflation go, over 100%. And so you had, the marks was, you could have 1 mark be able to buy bread one day, and then, within a few weeks or a month, you're going to have people spending millions of marks to buy. They were having barrel full of cash to buy a loaf of bread. And that's when inflation just goes completely out of control, right? And so that's the scariest thing. So people right now are going, why is the Fed being so aggressive? Why are they smashing markets? Why, obviously, whatever you think about Wall Street, but they're absolutely smashing their financial sector. Well, because their duty really is to, the 320 million Americans or whatever it is, the average person technically, and because it's the base currency, the rest of the world, they're going, well, that's way worse. That's way worse than smashing the markets. The markets need some pain. Because what's way worse, if we don't get this inflation under control, then the wage that you're getting paid, firstly, the amount of money that you have now is not going to be worth the same tomorrow. And we've seen that in South Africa and Israel when they've gone to 40% inflation, that literally that's, almost half your money in the bank. It's worth half tomorrow.
There was some countries that have experienced this, some smaller countries, where they talk about their money's being worth less than toilet paper.
Yeah, exactly.
Which is wild to think about.
Yeah.
So Greek, was that one of those ones?
Greece got really smashed in the European financial crisis as well. No, that was the thing was Zimbabwe.
Yeah,
Yeah,
right.
it was Zimbabwe, where a dollar coin was worth far more than toilet paper. I think it got more up to that. But there was huge corruption there and everything there. So that's really not great. So that's what we're seeing there. We're really trying to tackle inflation there. But
right now, sorry to jump in, but right now for Turkey, they got a 70% inflation rate.
Yeah, that's just wild.
Yeah.
So think about that. Yeah.
What living in Turkey right now might be like.
Yeah, think about that. Like literally your money is worth 70% less than what it once was. And that just smashes an entire economy. So we want to get onto that.
To get it under control.
Oh, yeah, so much so.
Yeah.
So, and that's why this market is so interesting right now and slightly scary, because those two big levers that we spoke about in terms of reducing interest rates and printing more money, those levers are being pulled down to the maximum in the last 2 years.
Yeah, smash.
So it's going to be interesting, because normally you'd pull those levers down when the economy starts going down and it increases productivity and growth, and away you go. Mm-hmm. Those levers are already down, and now we've also got a recession coming on. And then we've
what does a recession actually mean?
I believe it's 2 periods of down growth, something like that. Yeah, which is wild, because by the time you actually acknowledge that we're in a recession, like it's
usually towards the end of it.
Yeah, exactly like that. It's a period of time. Mm-hmm. So
the world is heading towards.
Well, Europe's already in a recession,
right? America's heading towards it.
Arguably, yes. Yeah. I mean, I just can't see any other way out of it when we've got those two main levers, and yes, there's other levers that they'll pull on and stuff like that to change it, and you've got that overall market cycle being turned down. And then the big other thing is that we haven't dealt with the debt.
Right.
There's huge debt from the financial crisis in 2012 that we just went, okay, well, here's a lot of free money, and everyone just went and made a lot of money. And that's, for me, one of the big issues of why we see a huge wealth gap right now, was because after 2012, money has never been cheaper before. So the people that could access it and get massive loans because of credit and everything like that, prior history and privilege, they just went nuts for the last 8 years.
Yeah.
Right? And so that's really made this huge gap. And there's still trillions and trillions of dollars of debt out there. So what's going to happen to that debt? We haven't serviced that yet. Mm-hmm. And then there's also this housing crisis as well, with, that always plays into it. Yeah, there's plenty of houses and units and skyscrapers around the world, especially in like America, New York, and China, that there's no one in.
Yeah.
So, look, not to get too scary, but I literally don't know how we get out of this without just max pain. Like we need to be a downturn, and the fiscal policy, as far as I can tell, for the last, essentially since the GFC, has just been, we can't have a recession. And so they just prop it up. So we haven't really serviced the debt that was accumulated in 2018. 2008.
And that uncertainty, is that, like, what does that do to sentiment?
Well, people are scared. People are fearful.
And what would a more behaviour like that be from somebody who is scared and fearful? What are they doing with their money?
In a recession, they're putting their money on the bed.
Right.
They're holding on to their money.
Yeah.
Because they don't know what to put it in. There's max fear around there. I'm just going to get smashed. I'm just going to hold on to the money. Which is bad for an economy, as we said earlier, is we need the flow of money. Yeah. So everyone is holding on to their money is not good for growth. It stifles it.
Yeah. So those are some monetary things that are relating to the negative sentiment. Mm-hmm. What else is going on around the world that's adding to these fears?
Yeah, well, I mean, you could probably speak more into the supply chain disruption there overall in within the crypto environment. What's your understanding there?
Well, that's more. To be honest, I can't articulate it to a higher level, but the supply chains around the world of similar, like the flow of supply, right?
Right.
So you're looking at what's happening with China right now with all of these
with food and everything like that.
Yeah, and the lockdowns. So the supply of things going on in China is at its top level because they're all at home. They're all locked down. So that has flow-on effects to the rest of the world.
Yes.
Right. And there's even, another one is the war, which is also relating to supply chains around Europe.
Yeah, where you can go, there's all tariffs and that sort of stuff. And then, that also goes into the energy crisis as well. Like,
what's the energy crisis about?
My limited understanding is that because Russia is one of the world's largest supplier of a range of resources, oil and gas being one of the prominent ones, and providing Europe with a lot of the energy needs through those natural resources, you then put massive embargoes on that. How are they going to get their energy? How are they going to get their natural resources to do the energy? And then on top of that, very aggressive moves towards greener energy supplies.
And has that even become more important after the war? And because of this, because Russia's got large, oil.
Yeah, well, part of this whole, I mean, it's just hilarious to me these days how, we've got to follow the pack. If one person's doing something and if we're anti-Russia, then we've got to be anti-absolutely everything. You can have your opinions on that. But what it means is that every single aspect that is associated with anything Russia gets cancelled. It's like this crazy cancel culture, right? And did it have an effect? I don't know. I don't know. It didn't seem to have any effect on the actual war, but I'll tell you what's had an effect on the overall economy.
Yeah.
Because, and that's the thing, you can put these things and you can go, okay, we're going to militarize the financial sector. Great idea. It's a less physically aggressive way, but who pays for that? You and me, and everyone else pays for that because shit's so much more expensive. Supply chains are absolutely smashed.
Price of fuel.
And then you've got these different economies that are militarizing as well. So they're pumping a bunch of money into their military because they don't know what's going to happen next. And so the weaponization of the financial system really took me by surprise. I didn't think they were going to do that. And that's kind of, scary what they can do there in the future.
For the right reasons, right? Like there was reasons that were...
The right reason now.
Yeah.
It's always the right reason now. Like you look at what's happening, like, with what happened with the truckers in Canada and stuff like that. Trudeau doesn't seem like a crazy dude,
no.
But he did some crazy shit because he was able to weaponize the financial system and lock out people and take their money away. Like that works now because it was for the right reason for the sentiment now. But now we've seen
sense of precedent.
Now we've seen they can do that. So what happens if you have someone in place there that's not doing it for the right reasons, whatever the fuck that means? It's just like people want it all one way and we've got to do it like that. It's like, no, think about this because that's just that person in there right now that you may agree with right now. And it may be the general consensus that, yes, that was used for a good reason. But it's the same. You can really amplify it up to going, okay, well, we dropped the atomic bombs for the right reason. We needed to halt Japan right there. Yes, but you've invented nuclear warfare.
Yeah.
And who's to say that the person behind the nuclear warfare, now that we've got with Putin, is going to have the same idea and whatever. And at the end of the day, you've killed a lot of people.
He might have his own take on what the right reasons are.
Exactly. And that's not to say whether that technology was going to be invented or not. But the premise there is going, you can't, in my mind, put a certain technology to use and in particular weaponize it like they did in both with the SWIFT system with Russia and both halting transactions and taking money out of bank accounts for Canadians. You can't say that that's work that's just there and then not appreciate or at least acknowledge that this could be used incorrectly in the future.
Of course.
So, for me, that's people don't really consider that. It's just what's convenient for their particular narrative right now.
Which is part of a bullish narrative for crypto, right? The idea of decentralized money and power over your
It's
own money.
ridiculous that a government can just jump in there and go, no, I'm taking all that money out of those bank accounts. Regardless, this has nothing to do with your view on COVID, pandemic, laws, regulations. No. That's not what I'm talking about here. Irrespective of that, you can't have the government come and take your sovereign wealth. Mm-hmm. It's like, well, where does that lie? Like, it's supposed to be, my right as a citizen is that I have rights to, I have ownership, I have priority, I have ownership of land and money and whatever.
Yeah.
You can just come in and take that. That's not a pillar of democracy at all. Yeah. At all. Not irrespective of why it was done.
I agree.
Anyway, so you've got all that going on. So you've got a lot of fear, a lot of doubt in the market.
Sounds pretty bearish, Tom.
We're in a bear market, ladies and gentlemen. Welcome to the bear market.
That sounds terrible.
Yeah. But there's some strength. The US dollar still increasing, right?
Yeah. So the US dollar, so the DXY, so it's measured against a basket of, I think, 7. Is that right? Right. 6 major currencies. So the dollar has been in an uptrend since 2011. Mm-hmm. So the DXY, the US dollar, and in 2014, it's really gone into a major uptrend. It's really pushed up, and we are in a parabolic move, right? So we're currently sitting at 104. I think it's like 104.4 US dollars is where the DXY is at.
Yeah,
and what some technical analysis is suggesting that will probably continue to go up to 112, 113, 114, that type of range over the next several months to a year to, I'm not sure exactly when, but that's the way it's looking like it's going. So if the strength of the dollar is increasing, which is, they're raising rates, so that's ideally to combat inflation. Mm-hmm. So I imagine that's part of the reason why the dollar's in an uptrend.
Yeah, it's all relation to the other ones. If they're decreasing more, then
exactly. Like the whole, it's not just the US dollar that's struggling with inflation. It's a lot of the world.
Yeah, exactly.
Yeah.
So with that being said, and us scaring away the other 2 listeners that we have because we're saying everything's blood red and it's a catastrophe. We're in the bear, as everyone has acknowledged now. How long do you think, Dos, we could be in this bear market for?
Crypto or everything?
Let's go crypto.
See, we'll refer back to the video we did last week about the 7 reasons why I think we could pull out of this bearish trend.
Yeah.
I think whilst the macro environment is like it is, it's bearish, it's scary. There is no reason why anybody should be bullish right now. But with crypto, there are heaps of things that are coming, that are on the horizon, that are bullish for crypto.
Yes. Utility is still being built.
Utility, users, integration, technology improvements. Like the technology is getting improved at this rapid rate. Like things that weren't possible 6 months ago. Like these, we're building. People in the space are building and pushing the edges.
Yeah.
Are really doing well. There's some really smart people in the crypto space. And like we're kind of talking about a little bit earlier, that people are starting to wake up for the financial revolution of like, hey, maybe my dollar isn't my dollar. Maybe my dollar technically belongs to the US government and I'm leasing that dollar off them, using it. Because they can decide to, in some of the examples you talked about earlier, they can decide to take it back if they have the right reasons.
Clearly.
So technology like crypto, like even Bitcoin, and like even with Bitcoin, the idea of just decentralized money has a really strong use case.
Yes,
and it's becoming more obvious every day to people, and it's the ability to access it through technology and regulation. All of this is only going in the right direction. So I think for the moment we'll continue with this bearish trend with the rest of the world until something happens. reasons. Until one of those 7 reasons that we spoke before, it might need to be a combination of those things. We will start to decouple, in my opinion, from the tech markets, the stock tech markets, right? The technological stocks. We're going to decouple and we're going to create our own, or crypto is going to create its own path. Now, macro will still affect crypto. I'm not suggesting that, just because we might decouple means that it's not this crypto stuff.
Well, at the end of the day, if people got less access to money,
yeah,
and money's more expensive, the consumer out there has got less ability to put it into crypto.
Of course, makes sense. But then when the macro does decide to flip, I think the idea is that we've seen in the raising of rates start to be effective against inflation, and they're going to continue to raise 50 basis points at multiple times. They already did one just recently, a couple more. That's kind of suggesting that there's going to be hard money is ahead for at least the next little while.
Yeah, and I'm thinking that time frame of the end of the summer, the American summer,
related to the election.
You've got the election on the other side. And what does Sleepy Joe want to be about? He wants to be interested, demonstrate interest in the economy.
And because he went, it's actually quite strategic. I wonder if he was thinking about this. I'm sure.
Well, it's both, doesn't it?
I've
got inflation under control.
We got it down. By then,
that's going to be
you have a few things to point to. So we got it. And hey, markets are going to come back too. You get the best of both worlds.
Yeah.
Vote for me.
Exactly. I got inflation under control, and now the economy is starting to move back. But I don't think growth is going to come back for a while, and especially in the macro markets and the macro sector.
Yeah.
But I think crypto is more sharply affected. It's going to decrease more, and it's going to get back quicker. And honestly, I think with everything being smashed, and even the yield curves being smashed as well, and the bond markets and that sort of stuff, and even commodities, I think people are going to be looking for greener pastures and going, well, actually, look how low crypto is and the bigger ones there. And I think that volume of money is going to come back a bit quicker there. Time frame, how long are you thinking if we could pin you to a stake and take your word for it that what Dos says is going to happen?
Oh, I couldn't give you a good one. I think we're going to probably be at the bottoms for a little while. So are you talking about from when we get to the bottom?
When are you going to see, what I'm asking that is when we're going to see a true uptrend, a resurgence, not just one of these sort of bounces and then back down again.
I think, where are we at now? We're at mid-May.
I guess so.
Yeah.
We are literally mid-May.
Mid-May. I think 4 or 5 months. Well, let's go with that.
Okay.
Yeah.
So you're feeling that really it's going to be protracted into the Australian summer, American winter, and really we're looking for an uptrend before Christmas and say November.
Yep.
Wow. Okay.
Here first. The start of the uptrend. Not saying that will be where it ends.
Yeah, there's going to sort of plateau around that bottom, whatever that bottom is. But
we're going to be
there for about 4 or 5 months.
Yes. I don't know exactly, but if you
I'm asking you to just have a guess. And if my guess, I feel that it might be a little bit quicker.
Right.
Yeah, I'm feeling sort of September.
Okay. That we start to see a strong uptrend in crypto.
Yeah, I think a lot of these rate hikes are factored in. I think hopefully we'll have some different things happening in Europe with the Russian saga. Hopefully supply chain issues are going to be, we'll see, depends. But I think a huge thing about the election, and then they're beating their chest saying they got inflation under control. It's an uptrend. But what I do feel in that overall macro structure is that we're going to have an uptrend. It's going to be decent. And then I think next year we're going to fall off a cliff.
Okay, interesting.
Yeah, I think they're going to really try and push this economy back up and then almost put a head in the sand and, in a recession, but we're not really in a recession. Because at the end of the day, we've got to feel some pain for all the pumping up that we've been doing over the last 10 years.
Got to pay your dues.
Yeah, with the debt and then with all the printing and like so much debt out there and no one's really paid for it.
So to pin you down to a number, so that was when we were going to start seeing an uptrend. What about when do you think we'll see the bottom?
When we're going to see this bottom of this current market here.
Yeah, for crypto, let's talk about Bitcoin specifically.
Yeah, so like signs of the bottom there. There's a few things there. So we talk about sort of this one thing we're looking for the signs of the bottom. Because people are going, well, how do we know it's a bottom? Because even like it was 25K, then it just went up to 31 and got rejected and came back down. There's going to be several of those. There's going to be so many where we just see, a 10% rally, maybe even a 20% rally.
Altcoins, the thing that was interesting about this recent rally, altcoins pumped. Like 40, 50, 60, they're like, all right, we're back on.
Yeah.
I think that's part of the up and down that we'll see when they get brought back to earth the second time. Because buyers keep buying the dip. They're going to run out of money to buy the bottom dip. Exactly.
So what are we looking for? What do we mean by that peak negativity? Well, here's some stats for you, Dossa.
Okay.
So since the start of 2021, investors have put $1.5 trillion into mutual funds and exchange traded funds globally, right? So far,
which are considered like safe investments, the safer investments.
Well,
ETFs compared to picking your own stocks.
It's certainly not crypto.
Yeah.
And so far, they've only taken out about 35 billion.
Right.
So that's not this max pain capitulation that we're talking about. So for that, you're probably more seeing that 300 billion in withdrawals, right? So, and stock allocations are at 63% among portfolios in private client networks. So again, you'd be seeing a drop of maybe in the 50% range. Okay, so it's not quite there yet.
Yeah.
Other things, the Max Fear Index,
the Bitcoin Fear and Greed Index.
Yeah.
So that's a very popular market sentiment tool that you see. Very easy to get. You just go onto Twitter. They've got their own little page there. But that I don't know exactly how they come to it, but it gives you a sentiment of the market between 1 and 100. 0 is extreme fear and 100 is extreme greed. And we're currently sitting at 9. So that's extreme fear in the Bitcoin market, which potentially suggests that we could maybe be closer to the bottom than we think. But it's historically, it's been a good time to buy when Bitcoin is in extreme fear.
Exactly.
But the thing is, depending on your time frame, it could stay at extreme fear for a while. But it depends on your time frame. If you want to hold it for longer, like people that we know, big shout out to Darcy in the chat. He can just his great mentality, dollar cost average, buy stuff, and just he's okay to not look at it for a while, which is great because if you're buying these quality projects, these big market cap projects, and you can just go, hey, we'll look at this in a few years' time, and the trend will probably go up.
Yeah.
So if you're looking for long-term buys, when the fear and greed index is really low, similar to where it is now, that is historically been a good time to buy.
Yes. And well, on that, the other big thing that I'm looking at is sort of that high volume selling climax, right? When the volume of selling is getting to that climax where everyone's just dumping. And I don't feel that's there yet.
Not yet.
As we were sort of saying, there's been a lot of sell-offs, but there's not, when we look at that volume of sell-offs, that's really what's going to indicate that bottom, because obviously everyone's just exiting the market and that volume isn't there in the buying to hold that price there, right?
Well, there's selling, but there's also a lot of buying too, right? Because there are, even though the monetary conditions are tighter, there are big institutions who've been good with their money, who've maybe foresawn this or just done good risk
Exactly.
Yeah.
And so that's why I don't feel that we've seen that max sell-off and that volume of selling outpace the volume of buying.
Yeah.
Right?
Exactly. And that's why all these rallies that we're getting are getting knocked down.
Yes.
But I think when Bitcoin and some of these cryptos get low enough that you're looking at it and you're going like, hey, this is a pretty good price to get in.
Oh, yeah.
Yeah. And you can't always time the bottom, right?
No, and that's it. Like, arguably now, like, many things have gone down 50% from where they were even
60, 70%.
Yeah. Like, I mean, it's hard to say, but stuff has gone down at least 50%. Many things have gone down 50% in the last couple of months.
Yeah.
So, arguably right now it might not be a bad time to DCA because where we have seen a big decrease, so you're not going to be too upset. But then, as you said, you can't ever time the bottom. But these are just some things that we've highlighted that are going to indicate the bottom. And I think the key there is not to rush into it, that there seems to be more pain. All the macro stuff we highlighted earlier, people are going to be a bit short of a quid. The average person isn't going to be going into risk markets, and then institutional money is risk off at the moment. So I think those factors is really going to reduce the amount of buy volume there. And so we'll see. So where do you feel we are going to go?
Well, there is some technical analysis you can be quite more confident with than others. And this is something that I think has had a 100% hit rate. It was what we spoke about last week, the date with Destiny. But every time that Bitcoin has closed a monthly candle, meaning that at the end of the month, that's where the candle ended. The candle
price is up.
Yeah, on a chart. When it's closed under the 50-week simple moving average, it has always gone to at least the 200-week simple moving average, which has historically been the best times to buy.
Now, I know Mum's going to ask me, what is a simple moving average?
I couldn't put words to it. It's a indicator that is the average of what the price has been doing in the past 200 weeks. The average of the price. I don't know how they get it, but I know that it's important.
It's magic.
People much smarter than I are looking at technical analysis. I just listen to what they say and what with their predictions about what they think will happen, and they give their reasonings as to why.
So with that 200 simple moving average.
Yeah. So, and that's where it kind of generally gets to around a closing basis, meaning that's where if we might go down to that, which currently sits, I think, around $21,000 to $21,500 Bitcoin.
Heard it here first, guys. DOS's financial advice.
Non-financial advice.
Sorry. Not financial advice. Do your own research. But we're looking at around potentially that 21K mark.
Which we're not far off it, right?
No, we're not. And look, there's lots of stuff to say that if there's huge fear in the markets, we can go a whole lot lower. And then what happens if, someone like Sailor has to sell and people get liquidated if we go below that. I'm really looking. I've got some alerts around that 23K mark. Yeah, I'll be looking to get in. If it's around the 21, we could go lower than that. I'll be looking to do a lot of DCAing around that 21 mark.
If it goes lower than that, which I think it will, I think we probably will see a $19,000 Bitcoin. Wow. I think that's on the cards.
Some alpha right there.
Yeah, but I don't think it'll be there for long.
Right.
So it'll wick down, and then people will be like, hey, Bitcoin for under 20K, probably a good deal.
Yeah.
Let's
probably see some big buying pressure there.
Let's sell a kidney. Let's jump in. Yeah. But that's a little while away. It might take us a little while to get there.
That's it. So, we kind of started talking about that, but what are we doing? And again, do your own research, do your own stuff. We're just giving you some degenerate
We don't know what we're doing.
We're complete degenerates. It's in the name. We don't know what we're doing. We're just degenning in, aping in, doing dumb stuff, but we're find it interesting. But this is what we think.
Yeah. And interesting what we were saying before about the feeling of going through this. And we've seen it happened before. We can look back at charts and go, oh, when things have crashed, this is what's happened. But it's great when you're in the market and to think and really reflect about how the sentiment and the feeling is of the market. It's bearish. Things feel bad right now. So when things continue to go down, this is what it feels like. It feels like and some of the thoughts you might be having. Maybe crypto is a scam. Maybe I have been tricked, and depending which coins you bought, you might have been.
Yeah, and so if we take a step back and go, well, actually, what's the best way to look at it? Firstly, what's the bloody difference between the coin that you bought in January compared to the coin you bought now? It's going, well, the price is totally different, but what's the actual utility? What have you looked at the the founders of it? Have you looked at the tokenomics? Have you looked at the narrative, the team, everything that goes with it? Is that still the same? Yeah, that deep dive. Is that still the same? Regardless of the price, is that still a quality project?
Well, this is why you need to keep looking at stuff, right? Because because it could change. And a good example of that is Phantom, which was a really good. Phantom had a great narrative, right? Phantom, the blockchain, FANTOM, and they did. It was one of their co-founders left the project. And the narrative spun quickly. Phantom was like an up and coming, this is one of the best blockchains, yada, yada, yada. I was really interested how easily that flipped just with a co-founder came out.
Yeah.
So it's important to stay up to date with this stuff.
Yeah, well, obviously with Luna there, they lost the pegging, exit out. So they're important. And then I think the other thing is from an investment point of view, don't ever invest more money than you have.
Great advice.
Just as basic. I mean, even with me getting slightly wrecked with Luna, it was from profits.
Yeah.
So I didn't have my original capital in there, right? And I got a bit fortunate there. But for God's sake, even if you see Bitcoin at 19,000, don't go super over leveraged or lend a ton of money.
Could go lower.
Yeah, you should only ever invest what you're able to lose. I think that's a big thing.
Yeah.
Like, really, you got to think about it as like all this money could be gone.
And so your experience with Luna, what will you be doing differently in the future? So,
firstly, what I'll be doing is, so we first said about the actual the coin and everything happening there. Do your research on deep dive on what's all happening there, and then okay, tick that's fine. If I'm going to buy something, firstly, it makes sense, but just to reiterate, like, we want to buy when there's max pain. You make your money in the bear market.
Yeah.
Ideally. Yeah. Buy at the bear and then sell in the bull market, right? Just as an overall thing. It's simple, but it's so much harder. It's easier said than done. So, but what I'm going to do differently is that if I'd bought, say, $1,000 worth of Luna, and I'd bought it at $50, I thought that's a great buy, $50. That to prevent this huge amount of hurt that a lot of people have experienced, if I've bought it at $50, I'm going to have an automatic sell order in there at, say, $40, right?
A stop loss
in there, right? Yeah. So you can, whatever percentage you want, I mean, you could, that's at 20%. So you could have it at 20% there, you could have 10%, whatever you want, but you could have it there a price where you feel, you know what, if I sell there, that's not that bad. I've lost 20% there. It's fine. It's not too bad. And then from that, you sell it all and you're going, okay, I'm just going to cut my losses, because that 20% loss that you've made there, that's a whole lot better than if it absolutely tanks, right? And then you can then buy back in at a better time in the market, right?
That's why I'm risk management.
That's a risk management way to do it. Not very degenerate of you, but that's probably a safer way to do it, of going, well, I believe in this project. I think it's great, but I've bought $1,000 here at $50. I'm going to have the whole thing being sold at $40. Okay, if it goes there, great. I'm going to look for a better time to re-enter the market. So I'm mitigating my potential losses.
So that's if it's going in one direction.
Yes.
What happens when it's going in the other direction? What are you
Great.
gonna do?
So we've mitigated our potential losses there.
Mhm.
Hopefully we've bought pretty well. It's at $50. And then now we start going up. So the big thing, like this whole thing about HODL and diamond hands, yes, we've got big time horizons. Yes, we're looking at a greater time horizon, even though crypto is super volatile. We're looking at this 5 to 10 year time horizon.
Yeah.
In saying that, this idea of hodling is just simply dumb. It's
Interesting.
dumb. It's
I'll
dumb.
push back on that a little bit.
Yeah. It's dumb because it depends on the type of coin that you're getting, obviously. Yeah. But a lot of stuff, like, my view on Bitcoin, never held on and don't going to hold on. I just don't think it's a great return on investment.
Yeah.
But if you're doing those altcoins or those mid-range coins and stuff, the volatility is that you need to take profits along the way, right? It's that if this thing, and this is just a real safe way of doing it, but say your coin that you bought at $50 has gone to $100, right? You've 2x your money. A safe way is if you take 50% out, you're taking your profit there. So you're taking 50%. So you've taken out your original capital, right? Yeah. And then you're just playing with the house's money. And then if it goes up another 2x from there, so 4x from your original, then you could take another 50%. And you take profits all the way up in the same way that you buy all the way down. So people could start buying now and they're going to buy all the way down to the bottom, for example. Yeah. Because you want to buy into the bottom and you want to sell into the top because you're never going to know where the bottom or the top is. That's because at the end of the day is that, yeah, sure, you go, well, what happens if it goes to $5 and it 10x's? Well, you're selling all the way in there and you might, hopefully you're not going to be doing too much buying in there and you've got enough there previously, but you might not sell at 50%. You might say, I'm going to wait till it's 3x's to sell 50% and then I'm going to do whatever ratios is your risk appetite in there. Yeah. But the idea is that you accumulate wealth. Yes. People have got this fantastical idea of that they're going to make a huge amount of money in a year. That's just not how it's done. The great Warren Buffett, wealth isn't made, it's accumulated and it's done over a lifetime. And Warren Buffett's fortune wasn't made till after he was 60. Yeah. Right? It's like this idea that you can just make a shitload of money unless you get real lucky with minting an NFT or whatever. Yeah. That's just not the real wealth in my mind. So you've got to accumulate slowly, and part of that is taking profits. And my old man did a great job there. Yeah. and I did the wrong thing, right? Yeah. Like when Gala went to 80 cents and I said he didn't know what it was and I told him to get in there at 1.7 cents. Yeah. The old man's like, I'm taking the profit.
Good idea.
And I'm like, I think this thing's going to go to the moon. I think it's worth $2. He's like, I don't care. I'm taking the profit. And he took it in December. Yeah. The OG, mate. Yeah. And he just told me yesterday he bought in at 5 cents. That's the way to do it. That's right. Do it. Yeah. He just bought back in at 5 cents and he's taking that huge profit out at 80 cents.
Nice one, Craig.
Because stuff is going to go up and down. Yeah, shout out to the old man. Wisdom right there. And look, that's just my view. That's what I'm going to do. Do your own thing and whatever and work out your percentages. But I'd literally do up a spreadsheet of the percentages that you are going to take profits on when it, 2x's or whatever.
Before
play with the house's money. Don't play with your own money. And again, I guess it worked out for me with Luna. I wasn't playing with my own money. Yeah. I was playing with the profits.
Yeah. I completely agree. That's a really good strategy, which I'm going to do as well. Where I was pushing back on is it sounds like a lot of work, Tom. Got to do spreadsheets. You got to keep checking the market.
What the fuck do you think this is? Do you think making money is easy and free? If it was easy, everyone would do it and everyone would be rich.
Look, what I'm saying is that there are people that hear that and just turns them off.
Well, they shouldn't be in investment then. Like, investment is risk. If you don't want to swallow some risk, then go play in the playground.
I didn't necessarily say they didn't want to swallow the risk, but they didn't necessarily want to do all of that work.
Well, then it's luck. Go to the casino and gamble.
See, I don't think that. I think that there are some projects, like I was hinting at earlier, like a Bitcoin, like an Ethereum, that you have strong conviction in long term.
Yes.
And look, we're degenerates.
Yeah,
not
you can
everybody's
do
a
that,
degenerate.
and you can get like a 2x return. That's why I don't have Bitcoin.
Yeah.
You know, you buy at 25k, it goes all the way up to 50k. There's 2x.
But like that's in traditional markets, the 2x returns are pretty good deal.
That's true.
Like pretty good, and you can have a high level. Well, I have a high level of confidence that Bitcoin will get to at least 100k eventually. I don't know the time, but eventually.
Yeah,
like a high level of conviction. I could be wrong, but we'll see how that plays out. But if you were listening, you're like, that sounds too much. I don't want to keep checking. I don't want to do all that. But you
invest in your super, go play in the kiddie pool, and just get Bitcoin and Ethereum.
Well, yeah, you could get these quality projects and just hold them. And if you're, like we were talking about with our friend, Darcy, if you're happy to just go, hey, I've got other stuff going on. I don't want to like be looking at this stuff every single day. You go, I want to buy these quality projects that I think have long-term growth.
Yeah.
And you go live your life, and then you check it like 6 months later. Oh, where's this at? And you go, oh, maybe it's down a bit because you didn't do all of those things. Take those profits and, have effective risk management.
Yeah.
There are opportunities that's why crypto is so great. You can be a degen like us and do all of this stuff, and that will give you a better chance of making a lot more money. But I think there is a pathway, in my opinion, that if you're not that into crypto, if you're not that into investing, there are people who are just I don't care about money, yada, 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 but they still want to make more money, protect their wealth.
Yeah.
You could do that with buying into something like Bitcoin, especially at the lows. Like you buy it close, high on the fear, it's been smashed down over 50%. Like you buy it around now, you check back in 5 years, regardless of where it's at in the market cycle, I think definitely it'll be higher.
Going for a run once a week, once every couple of weeks is good. Yeah. I encourage you. Go for a run. But you're not going to get fitter.
You'll get a little fitter.
You get a little fitter.
Yeah.
But you're not going to get fit.
Yeah.
Right? In the same way that absolutely buy some stuff. Good. Can do it. But you're not really going to accumulate much.
But I think if you're thinking about investing into crypto, I think that's a good question to ask yourself. What type of investor am I?
Yeah, what's your risk appetite for sure?
Exactly. Am I the set it and forget it type investor, which they've been profitable? You just follow a strategy, DCA, dollar cost averaging. Yes. I'm just going to buy Bitcoin every week or Ethereum every week. I don't care what the price is doing. I'm just going to keep buying. It'll go up. I'll capture those gains. It'll go down. I'll get it on the downtrend. And when it goes up, I'll capture the gains, but I'll keep buying it.
Yes.
So,
not very degenerate of them.
Not degenerate at all. And there are better, but I guess it's all about personal choice of like, it takes a little bit of time to do this properly. Like,
and that's exactly my point.
Yeah.
Like if you're not going to put the time in and you think you're just going to get rich and just hodl and not really understand the markets and not put the time in, then it's going to be like anything else that you don't put the time in. You just can't expect the returns.
Yes. Yeah, I'd agree with that. You get better returns if you put the time in.
That's it. Oh, that's some life advice for all the people out there. Mate, do you have anything else that you want to add in what you're doing, what your strategy is at all, mate?
I echo a lot of the things you said, and the best way to learn is through pain. I think diversification is a great way to kind of protect your wealth, but also potentially get more wealth, right? So I'm not just going all in on one coin or a couple of coins.
No.
I'm going to start looking at some NFT plays. We've already got a few different NFTs. So here's a thought. The crypto gaming market is smashed right now.
Correct.
And there are some NFTs that are already out on marketplaces for these games in the future. And even coins of these games that are coming out in the future that aren't out yet. They've got no or little utility. So you could look at Star Atlas ships. You could look at Mirandus exemplars. You could look at like a few different Mirandus land even. Like there are a few different things that are pretty cheap right now.
Yes.
So you could start diversifying into this stuff because NFTs are on like a different market cycle to crypto.
Yeah.
So diversifying into that, other assets probably too, but I think I'll probably stick with the NFTs and the crypto and just do effective risk management, like you just said, effective risk management and profit taking. And when I've done it in the past, it's worked really well. And then when I don't do it, it doesn't work that well. So just do more. Do more of the things you should be doing, right?
Put a bit of time in, absolutely. And diversification is key there. Shout out if anyone wants to understand more about that. Ray Dalio's book Principles talks about that. And that's one of the big key changes that he did to be one of the world's largest fund managers. And the yield is exceptionally better with diversification. That's a big part of it, absolutely. It's going to be interesting to see what happens in this crypto gaming space. Obviously, we've got Illuvium coming out soon and different things like that. But there's going to be some great buys coming up. And I know everyone goes, everyone in crypto is always positive and stuff like that.
Reframe it. It's always a buy.
Yeah.
Don't buy all the dips.
But hopefully all you listeners out there weren't buying in much in the last sort of 6 months and really weren't buying in that January, February time at the top. So you've got to understand the cycles and holding on to your money. That's why you take those profits, you hold on to the money and you wait for the bear market. And, those cycles are getting smaller, but that's what the good investors do. Raoul Pal talks about waiting for years to see a market cycle turn around. And you've really got to be quite disciplined in this space if you're going to do it that way.
And that's why I actually think that it would be worthwhile, in my opinion, to keep your eyes and ears onto this stuff that we're talking about right now. Because one of those opportunities feels and looks like it's coming up pretty soon.
Yeah, and then in that gaming space is only the good things are going to survive.
Yes.
That's one thing in a bear market is going to flush out
terrible projects.
The shitty projects, right? So a lot of stuff is going to be built in this bear market. We're going to see huge utility come on, especially in the gaming industry. So I'm excited because, you can't just put up a thing because it's hyped and people buy it because of the marketing. It's got to actually have good utility and it's going to provide some value.
Yeah.
So really have a look for some good quality projects out there that you're willing to take a risk on.
Yeah, I like it.
For sure.
Sounds good.
All right, guys. Well, thank you for tuning in. That is the Degen Den. The Degen Den. It's a hell of a thing.
It is. I like it.
That's it, guys. So
Episode
stay tuned. Episode 4. We've got 5 coming out soon. All things Illuvium with the upcoming land sale.